feel this way after struggling trying to save money for your retirement? I know just how you feel. As a business attorney for over 30 years, I've seen just about every retirement and tax problem there is. And for my clients, I've implemented a simple yet remarkably effective solution. But more on that in a minute. There's a reason why you and so many other good people have failed. Now, I gotta warn you right now, you're not going to like what I'm about to reveal to you. Because the truth is, they've hidden the real truth from you for years about what it really takes to save effectively and safely for your retirement. And that's why you failed despite doing everything that you've been told. Now, up until now, it's not been your fault because you've been told it's all about the investment vehicle, the firm, the broker, the product, the company, trading, strategy, timing, whatever. It's all wrong. They've deceived you despite everything you've been told. The two biggest obstacles to effective and safe retirement savings are elimination of taxes and elimination of losses. That's it. Retirement planning takes on an entirely new focus when you eliminate taxes and losses, and you absolutely can. I've done it for my individual and business clients now for over 30 years. I know you're shocked that you can absolutely build a retirement plan without taxes and losses from stock market. So, first things first though, before we get into that, I need you to understand that one of the reasons why you can absolutely receive a retirement plan without taxes and losses is if you understand the only three ways that all money is taxed. There's the tax now bucket. Tax now bucket is money that is taxed immediately. Bank savings, emergency funds, CDs, your paycheck. You understand this, right? When you get your paycheck back, your W-2 paycheck, your taxes have been already taken out and you get what's left, so it's taxed immediately. You want as little money as possible in this tax now bucket. Second area is what I call the tax later bucket, and this is money that is taxed later. You're familiar with this as an IRA, 401k, 403b if you're in the not-for-profit world. Money is put in these accounts, retirement accounts. They accumulate without tax and then they're taxed later at retirement. Now, you may be surprised to understand that you want as little money in this tax bucket as possible too. I'm sure you're surprised. The tax later bucket is really a tax trap for you. The IRS says, well, we'll wait on our money and we'll get the tax when you have a big bundle of money later on at retirement. You're told that don't worry about it, your tax rate will be lower when you retire. In over 30 years, I don't know of a handful of clients, I can count on one hand the clients whose tax rate was lower when they retired than it was when they were working. And secondly, you got to ask yourself, do you think tax rates are going to be higher or lower in the future? I'm listening. That is correct. Higher. So you want as little money as possible in this tax later bucket to avoid this tax trap. Let me tell you a little bit about what I mean by that. Let me ask you a question. Would you rather be taxed 10% tax on $100 worth of seed or $1,000 worth of crop? Yeah, of course. You'd rather be taxed 10% on $100 worth of seed, which would be $10, versus 10% on $1,000 worth of crop, which is $100. That's exactly the situation you're in with your IRA, 401k, 403b savings. The money accumulates without tax. That's the equivalent of the crop. And then when you take the money out at retirement, boom, the IRS is there waiting with their hands open to take the tax on your accumulated amount. It is a tax trap because, as I told you before, you're not in a lower tax bracket by all means, and taxes are going to be higher in the future rather than lower. So you see that it's a trap. This tax later bucket is a tax trap. Taxes can be as high as 70% or more when you calculate all the taxes on the money you pull out, and you are required to take money out of your retirement account. How about that? At 70 and a half, the government requires you to take your money out. Why? Because they want to tax it. And the total tax on the money you take out plus the money that gets taxed on Social Security and that money can be as high as 70%. So keep in mind, the question always, do you want to be taxed on seed or taxed on crop? And always the answer is tax on seed. And actually the answer is even better than that. Let me show you. There's a better way to save for retirement than this tax later bucket. Now I'm about to show it to you here. The tax never bucket. Tax never bucket is money that is never taxed once it's placed in your retirement plan. And the two types of tax never instruments are the Roth IRA and what I call the personal retirement program. You want as much money in this area as possible. Let me first tell you about the Roth IRA. This is an IRA and there are limits on the amount you can put in, $5,000, $6,000 a year. It's all you can put in as of when I'm putting this presentation together. There's limits on the income. If you have over a certain amount of income, then you cannot have a Roth IRA at all. You have to wait till 59 and a half to take the money out. It's got to accumulate for a certain amount of time. And with the limits on the amount you can put in, as well as the income limits, it's very difficult to build up any significant amounts in your Roth. Now, true enough, with the Roth IRA, if you can establish one, then you can pull that money out tax-free. But you can see that there's a whole ton of restrictions on making this practical for you, for most people. Now, the other tax never instrument is what I call the personal retirement program. There are no limits on the amount you can put in, no income limitations. You can earn as much as you can or as much as you are able to with your income, and you aren't restricted from using the personal retirement program. No age restrictions on when you can take the money out, no use restrictions on what you can use it for, and you can create tax-free income from the personal retirement program. As you can see, it is far superior to the Roth IRA for the tax never strategy. The personal retirement program, you may wonder, well, what is that? It's the abbreviation I use for a specially designed equity indexed cash value life insurance policy and specially designed equity indexed annuity. They're constructed to maximize safe, tax-deferred cash accumulation, meaning the money builds up and you don't pay tax on it as it accumulates. And then the life insurance receives special preferential treatment in the tax code going back for many, many, many decades. This preferential tax treatment allows money to grow within these instruments and be withdrawn, if you structure it right, without tax. Now, the personal retirement plan program is safe, pays an excellent return, the savings accumulate tax deferred, and you can create an income upon which you pay no tax. You can also create a guaranteed income at retirement that you cannot outlive. Now, with the personal retirement program using these equity indexed insurance products, there are surrender charges. You should know that in full transparency. Surrender charges are designed to keep the money in the policy for the time it takes to overcome the cost of insurance. Surrender charges actually keep you focused on savings and accumulation, but once they're gone forever. They never reappear, unlike bank CD surrender charges that constantly reappear at the end of every CD term. You should only use money for the personal retirement program that you intend for long-term savings. So here's an example of how an individual can use the personal retirement program. In this example, I'm using a 35-year-old male, preferred non-smoker class, puts $300 a month for only 30 years into the personal retirement program. That means the total investment is $108,000 for 30 years. Now, the cash value at age 65 is $355,911. The death benefit is $469,911. At age 75, the cash value is almost $800,000, a little under $800,000. The death benefit is $869,000, and at age 85, $1.7 million cash value. Death benefit is $1.8 million. Let me reiterate, the death benefit with the personal retirement plan, because we're using an insurance policy, is 100% tax-free to the recipient. And the cash value is money that you can use at any time. As long as there's cash value available, you can use it, and that cash value can be structured as a policy loan to withdraw that policy loan out without tax. You pay interest back, but you're paying it back to yourself. If you're pulling out money that is really just premium you've put in, there's no tax for that. So there's many ways that income can be taken out of the personal retirement programs and have it be no tax. And there's no restrictions on what you use it for or when you can use it, as long as there's cash value accumulated in the policies. You can use your cash in your personal retirement programs for any purpose: mortgage protection, college funding, business investments. It's very flexible. The personal retirement program can also be used for business. You can use it to create what's known as discriminatory executive compensation plans. What that means is compensation plans that you give only to specific executives in the company. Regular 401k and IRA plans restrict your ability to limit benefits to only one class, but the personal retirement program, you can create these special programs for certain executives, key executives. You can use it to fund buy-sell agreements, key person plans, and you can create a tax-free exit strategy with tax-free income streams for business owners without having to sell the business. This is often an issue for business owners. Their retirement or their exit strategy is tied up in the business, and they have to sell the business in order to get this income stream. With the personal retirement program for business owner can create a tax-free income stream for him or herself and not necessarily have to sell the business. The personal retirement program is safe, pays an excellent return, savings accumulate tax deferred, and you can create an income upon which you pay no tax. You can create a guaranteed income at retirement that you cannot outlive. Okay, so now we've dealt with taxes. Let's talk about losses. Remember, I told you the two main obstacles to effective and safe retirement planning are taxes and losses. Losses, as you know, can wipe you out overnight. I have talked to many people who've come to me for planning who lost incredible amounts of money in the stock market and wanted to get safety with the personal retirement program. Let me show you statistically, just numerically, the impact of losses. Let's say you have a 10% loss. It takes an 11.1% gain to recover that total loss because you have less money upon which to get the gain. So it takes you more than a higher percentage in order to get the money back. And the years to recover are 1.1. And you can see the higher the loss, the higher return you have to have. And let me just say, these returns here are quite unrealistic for most people without incurring risk that is way out of the realm of most people's taste and the time that it takes to recover. Remember also that the time that it's taken you to recover, if you ever do recover, for losses is lost time that you're not gaining. So any way you look at it, losses are a negative in any kind of long-term retirement planning program. You would have been much better off if you never had to suffer the losses to begin with. Take a look at this chart. The bottom line here, the blue, is what happens to you if you're in the market and you suffer losses. Let's say the first year you get a slight gain, next year there's a loss. Okay, well, your total is down at this lower level. Even if the market goes up the next year, you have to come out of this hole, and you're not even to where you started yet. And you see this process continues with losses and gains. But if you're at a position where you never suffer any losses at all, when the market goes up, you gain. When the market goes down, you stay the same. You get a zero return while everybody else is getting negative. And when the market goes up, you go up also, but you're gaining from your superior position. You see that after a certain amount of time, any amount of time, you end up with more if you never have to suffer losses to begin with. Equity index life insurance and annuities are designed to do just that. As a matter of fact, this is an actual chart of the returns, the actual historical returns for an equity indexed annuity versus the stock market. The equity index strategy gives you access to stock market gains, as you can see here, but avoids the stock market losses. If you get zero return, or your guaranteed minimum, when the market goes down, you stay at where you were. All your gains get locked in, you never lose your gains, and you gain forward momentum from a positive position. You never have to make up for losses. Also, with the equity index life products, you receive a guaranteed minimum return that you will never earn below no matter what the stock market does. The bank and stock industries can't do that for you. And there's only three ways where you can save for retirement: the bank industry, the stock industry, and now you know the life insurance industry. With equity index products, your premiums are never actually put in the stock market. Your returns are just indexed to what the market does. So as a result, you never have any risk of loss, stock market losses. And the least you will earn is the stated guaranteed minimum return, with the potential to earn a portion of the growth of the index that you're linked to. So as a result, you have the opportunity to participate in stock market gains and avoid stock market losses. Your principal and premium can grow and are protected from stock market losses guaranteed. The stock and the bank industries can't do that. So let's recap. To effectively save for retirement, you need to avoid taxes and losses. The bank and the stock market industries can't protect you from taxes and losses. The bank and the stock industries can't give you a tax-free death benefit from day one. You make one payment into your personal retirement program and you get the death benefit. But if you put 1 month's worth of savings into a stock account, all the stock market industry is going to give you back is what you put in and any gains you made, if you've made gains. The same with banks. And don't forget about the IRS tax trap. But there is a solution, and that solution is the personal retirement program. The personal retirement plan is safe, it pays an excellent return, it pays a tax deferred, the money grows tax deferred, and you can get an income upon which you pay no tax. Now, as good as the personal retirement program is, nothing is cookie cutter and works for everyone. Your specific circumstances and needs must be carefully evaluated by an experienced professional to determine the right plan for you. And that's where I come in. Some people are just not right for the personal retirement program. They're not willing to save, they have a short-term mentality, and they won't let money accumulate, or they're just plain hard-headed. But if you are ready to retire younger and richer, and you want to eliminate retirement plan taxes and losses, and you want to attain tax-free income and provide for financing or money for mortgage protection, college funding, business investments, emergency medical bills, bucket list travel purchases, then call the number below and schedule your free, no obligation appointment to discover if the personal retirement program is right for you. There's no obligation, no pressure with the consultations. The consultation is absolutely free, and it's a comprehensive consultation to let you know where you stand and if the personal retirement program is right for you. I also offer a 100% money back guarantee. Let me explain. If we determine that the personal retirement program is a good fit, you can wait until you take delivery to ultimately decide. If you don't like it, just say so, and anything you pay to that point will be 100% refunded, guaranteed. So you have nothing to lose and everything to gain. So now that you've been educated, it now becomes your fault if you procrastinate. The personal retirement plan gives you an opportunity to get returns that are safe, excellent returns, tax-deferred growth, an income upon which you pay no tax, and a guaranteed income stream that you cannot outlive at retirement. If you procrastinate, statistics show that there's an 80% probability that you'll never deal with this, and you know who gets hurt in that event, you and your family. And ultimately, you know what the consequences are if you don't take care of business. Call the number below right now. Don't delay anymore and schedule your appointment. There's no fee. I'm giving you 100% money back guarantee. You can't lose. Call the number on the screen below right now to schedule your no fee, no obligation appointment today. You'll be glad you did.